Mortgage rates remain high and many people are using this as a reason to sit out of the housing market. If this market is making it unaffordable for you to buy a house, then you should not be looking. But if you can afford it and you just prefer a lower rate, really this is a cash flow preference and you should be considering what impact buying a home would have on your taxes. Take this married couple filing taxes jointly. Assuming their employers are properly withholding, using a standard deduction, this is what they would owe in taxes at the end of the year. They want to buy a home for $750,000 with 20% down, but in today's market, that means their monthly payment would look like this and they decide to wait. But let's assume they buy the house in November and their first payment is January 1st. Next year, they can itemize their tax deductions, which includes the interest they paid, but also a portion of their property taxes and state income taxes. By doing that, they would no longer owe taxes, but they would get a refund of this. This is where some people will point out that you shouldn't buy a home just solely for tax deductions, and I would agree with that statement. But if you can afford to buy a house and you're only sitting out because of higher interest rates, this is really a cash flow preference, in which case tax implications should be considered. For all you non-married people out there, here's the same scenario for a single filer on their tax returns with the same income and purchase scenario.